Hey everybody, welcome to the video today. I'm going to be doing an update on the markets. I'm again kind of out of the office, so I'm doing all of this remotely. Thank you for joining. Thanks for watching. I want to get the link out to our Discord server. If you don't have access to our Discord server, it's real easy to join. You just click on one of the links in the video description, and I'll be more than happy to give you access to our Discord server. And of course, before I get into any of this, as you all know, this is not financial advice. I'm not your financial advisor. You are responsible for your own trades, managing your own risk, doing your own research, and I'm always just giving my opinion on the market. So let's go ahead and let's see here. Here in just a moment, we'll move into the charts and we'll take a look at everything. Okay, so what I'm looking at right here, I'm looking at Nasdaq. Starting with Nasdaq, what I had said in the past is Nasdaq has more potential for upside than the S&P does. And I still think that that is probably true. One thing that I want to kind of outline here, just a couple things. So first off, we've got a good trend line. It provided a little bit of support here. I'm going to go ahead and remove that. And what I'm also going to do, I'm going to try and clean this up a little bit. I've got a couple different moving averages here on my chart. Of course, I've got my yellow 21, I've got my green 55, and I've got my blue 100. And the orange one is actually showing as, let me just make sure that I've got that. That's going to be my 8 moving average. That's the 8 exponential. So I've got the 8, the 21, the 55, and the 100. So a couple things just to make note of here. Let me remove this for just a moment. It's a couple things to make note of. One, it looks like we're curling up. It's pretty clear. I'm looking at this on a daily. It looks like we're curling up. And actually, if you take a look at the indicator, all right, so this is our indicator, and I'm on a daily. So what that means is my green wave, that's the daily. And we bottomed out, and we have been curling up. We've been going up ever since. I got pretty aggressive on long positions. It was right down here in this range below the 100 exponential. And I even had some people on the Discord server that were saying, wow, he's really exposing himself to a lot of risk down here. And I was, and I'm okay with that, because with all of the trades that we take, we have a clear defined risk with all of the equity positions that we took. We closed out some of them today for, some of them 10%, 12%. On average, I think our average take profit today was a 10% trade. And we took that on, I think, 4 or 5 different positions. It was quite nice. Now, we're still long on metals, gold, silver. We're long on Google. We're long on Google, and I've got a few other positions in there as well. But nonetheless, this looks pretty healthy for a continued move to the upside. So I've got this bottom right here, and I'm going to just do a fib pull from this bottom to this top. And I'm going to talk a little bit about these moving averages. So first off, first thing we see here, and we talked about this when it happened, we hit the 618. And what do I always say? One of your highest probability trades are to buy or sell, if we're in a downtrending market, buy or sell the 618 and get out of that trade at the negative 236, which is going to be at 14,500. All right, so let's just talk about that 14,500 for just a moment. I'm going to tighten this up just to put it off to the side. I'm going to take another fib pull. I'm going to take it from this top up here. Let me see if I can tag it. This top down to this bottom down here. All right, what do we see? We're measuring the top to the bottom, and that 1.382 extension target to the upside is right at 14,500. Is that going to be the top on Nasdaq? I can't say that that's going to be the top. I don't like calling a top, but what I can say is when we get to 14,500, let me just tell you guys something. We're going to experience something in the market that you are probably not going to be ready for. 14,500, wait for it, because my guess, it's probably going to hit sometime in mid-June, right? So even if we follow the same trajectory that we have been following, okay, so we're kind of moving sideways here. If we just keep going at this trajectory, there's June 18th, right? Maybe we have another push to the 4th of July, potentially. Fireworks on the 4th of July, I believe we're going to go down, and I think we're going to be in a downtrending market for all of Q3. I think Q3 is not going to be a really great year. Let's take a look at this on the S&P 500 just to see what it looks like. What does its chart look like? I'm looking at the ES chart. And again, looking at this, what I'm going to do is I'm going to pull from that same pivot to the downside here and take it to the upside. Where did we fall? We fell only at the 50. Now, keep in mind, Nasdaq went down to the 618. S&P 500 only went down to the 50%. Okay, let me just remove that. Actually, let me put it back on there. Let's take a look at the upside target because we've got the -236 and the -32. Now, remember, we didn't go to the 618. So potentially some signs of strength there. 43.31, 43.89. Are we going to make ourselves find a top almost at 4,400? Well, we've been talking about 4,400 for a long time. That should be no surprise. Let's just measure again from the top to the bottom. What do we have right here? 43.19 at the 1.382. That extension target, 43.19. And we had our top. You know, we had it projected right up here at about 43.50. So for the S&P 500, I'm looking at about 43.50 again over the next month. Okay, I think we've got about another month of uptrending market before things start getting hard. Now, keep in mind, money was hard. It was hard to make money in the market for a little while here. When we had this chop right here, that was difficult. That was difficult to make money. We were able to make money on the way up pretty easily. This was also difficult. It's always frustrating to take a stop loss, but you have to take that stop loss. Now, again, I'm looking at the daily. What do we have on the S&P 500? We are trading above the 21 exponential. We found support at the 55 exponential right here. So I don't have any reason to be extremely bearish right now, but I will here pretty soon because we've got that upside target that we've been projecting for a while. You know, how it gets there is never clear, but when it gets there is when we have planned the trade. And at that point, we need to trade the plan. So I'm going to be getting into some long-term verticals on indexes, IWM, SPY, QQQ, maybe DIA. I haven't decided because Dow Jones has been a pretty strong market over the last couple of months compared to other markets. When we had S&P 500 was trying to break through all-time high, Dow Jones was just leading the charge. Dow Jones had been the number one. S&P 500 was like a short second, and then Nasdaq has been that lagging index. It's been that lagging index. Now, through most of 2020, it was the leading index because, I mean, if you take a look at the weekly chart, you know, you've got Nasdaq that has really outpaced the market. S&P 500 hasn't had the same amount of gains that Nasdaq has. And then, of course, there's good old Bitcoin. Before I go to Bitcoin, I want to take a look at this on an hourly time frame because I want to focus on everything here. So obviously, I am expecting some upside. This right here, the 55 and the 100 here in the hourly, it's looking pretty good. You've got the 21 that has crossed above both important moving averages. And of course, you can also see, because I've got the 8 exponential on here as well, that is also above important moving averages. It's showing a bullish cross. Whereas previously, if you take a look back here, we were seeing bearish crosses of all the moving averages. And what ended up happening? Well, the first sign that you had was back here where the 8 and the 21 crossed bearish. And that was basically, you know, finding some support there at the 55, lost that support. Then you saw basically a widening of these moving averages, and things didn't really start to feel safer until we finally started to see this, where you had the 8 and the 21 starting to cross bullish. And now you've got the 21 above the 55, which happened right here. And we are very close to having the 55 and the 100 crossing bullish as well. Let's take a look at the 2 hour. On the 2 hour, you've got the 21 and the 55 that are just now crossing. Now, this is only 30 minutes into this candle, but this is very, very bullish. This is bullish. And of course, if we're taking a look at this from an Elliott wave perspective, let's look at this on this 2-hour time frame. From down here, take our trend-based fib extension tool. We've got our top and then our pullback. We're going to be very close to hitting this top up here, which coincidentally at 41.78. What is that in confluence with? Well, hopefully your eyes work and you look to the left a little bit. Take a look at left and see what we've got. We've got a top here. We've got a top here. You know, this is 1, 2, 3 times that we have hit this level. I'll tell you one thing. The market commonly will give you 2 chances, but it rarely gives you a third. And what I mean by that is to take a trade, right? You had an opportunity to take a short position here, and then you had a second opportunity to take a short position here. Okay, so you had a little bit of a pullback, but then here was that big pull. So if you did try and short that double top, even though I'm kind of counting this as 2 touches, really this was, you know, in a larger sense, this was 1 attempt, second attempt. Well, that third or fourth time, it's generally speaking not going to work. It's not going to work because the more times you run into supply, well, that supply is going to be reduced every time. So you would have had distribution here. You would have had distribution here. Well, what you have down here, I would say this is a good case for accumulation. Look at the indicator. The indicator was saying, yeah, let's buy this. Not only that, but we had a bullish cross on the 12-hour, because this is almost a 24-hour market. A bullish cross on the 12-hour right there, right on the pullback. Nice little ABC pullback. So again, this looks good for some upside. And where is our 2618? Well, let's take a look at where our 2618 is. I'm going to have to put it on here. And the 2618, let me find it. Here we are. Right there, 42.3675. So more than likely on this smaller degree, 1, 2, 3, 4, 5, we're gonna hit this, right? So 1, 2, 3, potentially going to hit here at the 1618 to the 175. I talk about that every once in a while as well. If you haven't, go take a look at my Algo City video. Let me put the 1.75 on here, and that's going to give our target for that wave 3. So again, we're going to be looking for this to pull up, and then we're going to more than likely kind of move sideways here before we move up higher. I don't think we're going to get a significant pullback. I think it's going to be, you know, probably consolidation up here. It's going to look very similar to what we had over here, but the main difference is we are going to more than likely break up. And the reason why we're going to break up is because we have already exhausted the supply here. And so therefore, we're probably going to push up, find this now as support, and then move ourselves up here to our target. Now, again, I'm still eyeing 4,300 to 4,350 for ES. That's not going to equate to the exact same thing on SPX or on SPY, of course. But nonetheless, I still see some more upside here. So I'm not afraid. I think that things are generally speaking pretty healthy. I would expect there's probably going to be a little bit of a pullback, but I would expect it to be more consolidative in looks versus a significant pullback. I don't think we're going to get anything like this. All right. I think we're going to see a larger push up. Let me go to a 3-hour and see where we're looking. You've got this 8-hour. Our 8 exponential on the 3-hour, which has crossed above the 21s, crossed above the 55. It's trying to cross above that 100. All of these scenarios are pointing to higher prices. Your lower moving averages are moving upward. Even on this 3-hour, take a look at this 100 exponential moving average. It's actually pivoted. It was kind of trending down, and it's starting to pivot to the upside. So this is also very healthy. Let's take a look at Bitcoin, because I know a lot of people are interested in Bitcoin. All right, so Bitcoin yesterday did something that I wasn't expecting it to go as low as it did. I'm just going to be completely upfront and honest. But what I believe is now that we have cleansed the palette, I am long, I am long, I am long. So here on the hourly, what can you see? First off, you can see that time after time after time, let me just try and zoom in a little bit here. Okay, so what did we have right here? Resistance at the 55. Right here, resistance at the 55. Right here, same thing. Right here, even after this bounce, same thing. But what happened next? We broke above, tested the 100, broke down, but came back above. We are still above that 55. As long as we hold above that 55, I think things are very healthy. I think things are very healthy. Something that I can see here is we've got this kind of formation, which some people will say is bearish, but I tend to believe that this is a formation that is going to break to the upside. I believe it will break to the upside. We were at $30,000 yesterday, and now we're at 41,000. Bitcoin has increased 33% or more since that low. Now, obviously, not everybody was able to catch the low. I know some people on the server that did. You know, we'll call it luck because, well, again, one, I didn't expect it to go that low. Once we hit like 37, 36, I thought that was it. I thought, you know what, this is it for now. But this is not a bear flag, okay? When you're looking for a bear flag, generally speaking, you're going to be seeing a large move down, and then you're going to see some consolidation down below before it breaks down some more. What you're not going to see is something that looks like this: down, up, down, and then a big move up, and then consolidation here. That's not usually where you're going to see that. That leads me to believe this is a continuation to the upside, or really a reversal pattern. If this was a bear flag, you guys, what we would see is a move down here, and then we would be consolidating down here. That would be extremely bearish. But that's not what we've seen. We saw significant absorption. You hear me talk about absorption every once in a while. We saw some significant absorption here. And you saw a lot of liquidations. A lot of longs got liquidated. That was way overdue. We needed to get longs liquidated. We needed that for a long time. We haven't had that. The other thing too, I can tell you time and time again, a lot of people on the server were like, boy, you know, I wish we would have another day like March of 2020. Well, you guys, we just had it. We just had it. I'm hearing the same thing over and over and over again. I'm hearing the same thing. I can't wait to short. I can't wait to short. Well, after you had an event like this, I'm going to call it an event. Once you have an event like that, a big major liquidation event, well, now generally speaking, it's going to go in the opposite direction. Let me just point something out here. So this formation, obviously hindsight's 2020, no doubt about that. Hindsight's 2020. You needed this because once this lower broke, all of these people that bought up here, and guys, this was starting all the way back here on February 8th. So that was 3 months of, we'll call it distribution, right? A lot of people have been talking about Wyckoff, that it looked like distribution. And I tend to agree at this point, but I also believe that we have created somewhat of a bottom. And I say somewhat because I'm not saying that it's impossible for Bitcoin to come back down here to these lows. What I'm saying is the event that we had yesterday means that a lot of people got squeezed out of their position. A lot of people got liquidated. A lot of people, you know, are kind of out of the market. But at the same time, this is generating new interest to the market. We had that major event, and a lot of people are talking about it now. And it's not people talking about it in the sense that, oh, you know, we're making new highs, everybody's making money. No, it's kind of the opposite, but it generates that interest of smarter money. Retail money is dumb money. Retail money chases big moves to the upside. Okay. Smart money waits for a big event like what we just had, and they start looking for ways to be buying. You know, there are some people, of course, that already did that. there were more withdrawals from exchanges just in the last day or two that I think I've ever seen. Once we recovered all the way up to 40,000 after we basically capitulated down to 30,000, there was something like 16,000 Bitcoin or more that left exchanges. That is a very bullish sign for me. One, because all of that Bitcoin is not on an exchange to be traded, so more scarcity. Two, where is all of that Bitcoin going? It's not going to be sold somewhere. It's being stored somewhere, because generally the thesis is that we're going to see those higher prices. I believe that Bitcoin's going to, at some point this year, retest the high, probably go higher. Same thing with Ethereum. Here, a year or two from now, Ethereum is going to be pretty steady at $5,000 or more per Ethereum. And we had a push down to 2,000 yesterday. I think it actually went a little lower than that. Ethereum versus the US dollar, where did we go? We went all the way down to 1850, almost 1850 here. Oh no, we hit 1850 right on the nose. So yeah, I believe that Ethereum is also going to be fine. Looking at the daily, this is the 100. Let me adjust my my moving average here, because I want to put the 200 daily on here. Didn't quite test the 200 daily. So I put a tweet out there yesterday. I said, a lot of people are looking to buy that 200 on the daily, and we didn't get there. Did we get there on Bitcoin? Let's just take a look. Bitcoin, yes, and actually it's below the 200 on the daily. So I would love to see us reclaim that 200 exponential. Something else that I put on my tweet yesterday was there's a lot of people, I guess it was 2 days ago, but there's a lot of people that are looking to buy this 200. So that's going to be a natural resistance short term, but it's going to break. It's going to break to the upside. So right now it's at about 42,000. So I'm just going to mark that off, and I'm going to go to an hourly. Right now it's at 42,000. So yes, we are trying to push up above that. So that level right there, you can see it. You can see it. It's very clear. It was support right here, and now it's resistance. But I believe we're going to push up and retest that and then keep on moving. That's going to be the 100 exponential on the hourly. That is the 200 exponential on the daily. They're kind of all in the same place, As far as the waves indicator goes, things are looking just fine. I think that things are looking just fine here. So let me just move on over here where we've just got the indicator. We had a buy signal right here. And then of course, right after we had that buy signal, we had, our capitulation, but a good bounce back, a good recovery. And a lot of alts are doing okay as well. I'm not overly concerned about alts either. Although we did, of course, have a large amount of market cap that was taken away from the market. I'll call it taken away. If the market cap gets reduced by, say, $1 billion, that doesn't mean $1 billion left the market. That just means that the prices have reduced so much that it makes the market cap worth whatever it would be with that reduction. It doesn't mean that much money left the market. It's a common misconception. So let me move to the weekly here on dominance. All right, so let's just put something in perspective. 2017, you had tons and tons of euphoria. People were making tons and tons of money, participating in pump and dumps, but the Bitcoin dominance is almost where it was in December of 2017. Do you see this? How low Bitcoin dominance is? It got as low as, what we were seeing in January of 2018. And that's very interesting to me, because what I'm not seeing is these major market cap coins that are just making huge gains. Now, of course, since January, a lot has done quite a bit. Since we had all the way back here, February, up here, December, when we had the Bitcoin dominance up here in the 60s, ever since then, we've had obviously a free fall in Bitcoin dominance, but there is going to be a change. Now, altcoins are going to gain in USD as Bitcoin gains in USD, but also we do have to be very careful and very selective. I did a video about a week and a half ago discussing altcoin picks, and you can go back and you can watch that. And I talk about how I do that and why I choose the coins that I do. I don't pick something that has gone completely parabolic. I find something that hasn't yet, because there is a rotation, there will be a rotation, and as long as you're patient, you're going to be fine. You're going to be fine. The crypto market as a whole, it's going to be fine. Now, Bitcoin could still go down, but I tend to believe that we are at a point where we probably have bottomed to a certain degree, and we're on our way up now, going into a larger degree move to the upside. When I say a larger degree move, I'm talking like, we're not talking about counting waves on a 5-minute chart, I'm talking about counting waves on a daily or even a 3-day. So I think there's more upside. I guess that's what I'm trying to say. Okay, I don't think I see any questions on the YouTube, so I'm going to go ahead and stop my share. But of course, thanks for watching. Thanks for joining. Hope this was very informative for you. And wherever you're in the world, I hope you're having a good day, a good night, and a good evening. Take care, everyone.